Hi and welcome to the weekly market update. It's Tuesday the 20th of August 2013. So it's been a very quiet start to the week again for the market. Still that holiday season, but also in terms of data, really not seeing that much to start the week off. This morning we saw German PPI data, that all coming in just slightly, the figures slightly lower than expected. Also we had Eurozone construction output, and that coming in better than expected, but not really any market moving data. And then from the US this afternoon we had the Chicago the activity index from them, so really no market moving stuff there, like I said. So where that leaves us sort of trading, we've got the FTSE around 64.21, we've got the Dow around 15,003. In terms that we've seen stocks a little bit under pressure at the start of the week, and especially today we've seen stocks a little bit down and a bit under pressure. In terms of currencies, we've seen a bit of a weaker dollar, so we've seen strengthening euro in cable. We've got the euro trading around 134.44 and cable at around 1.5683. In terms of commodities, also seen a bit of pressure on those there again with all these tapering fears. It's sort of putting a bit of pressure on commodities and those riskier trades. And we've got gold future around 1371, that's the December, and then the Brent future around 109.02. Okay, so in terms of data for the rest of the week, it does pick up a little bit. We've got tomorrow, we've got the Netherlands house price index is at the moment, Netherlands is something to keep an eye on, and there's talk of this housing bubble in the Netherlands and the effect that this might then pass on through to the economy. And there's sort of been talk about it for a while, but it's coming more into focus now. We saw their retail sales out recently, and they came in much weaker than expected, like largely down on retail sales, and this is the pressures that are passing on from the housing bubble and the effects there. So something to keep an eye on tomorrow morning, watching that house price index in the Netherlands. Also from the UK tomorrow, we've got sort of public sector net borrowing and public finance data. We're expecting the consensus is largely negative figures to come in across the board. Also got CBI reported orders and also selling prices from the UK. From the US, we've got mortgage applications, and the reading was down 4.7% last. And then we've also got existing housing sales, and we're expecting those to increase slightly there for the US. And also, though, the focus really on tomorrow evening is going to be the release of the Fed minutes following the last meeting. Again, people are going to be really closely watching this for those clues. Again, not expecting any time frame to be given, but expecting that they will continue to prepare the market for the tapering. So continuing to hear the language that we will, tapering around decent conditions in the market. So again, just to keep that running through. So interesting to see the reaction on that from Wednesday night. I think that is going to be the focus of the week, as the data isn't too significant. Into Thursday, we've got overnight the Chinese HSBC flash PMI manufacturing reading, and then from Europe throughout the morning we've got the PMI manufacturing and also the services reading, this coming from France, Germany, and then the Eurozone as a whole. Expecting those to creep up again. We've seen a slow grinding up of these numbers and taking into positive territory and even over that 50 threshold. So again, hoping to continue to see that positivity through Europe and some good readings for their PMI manufacturing and also their services. No UK data Thursday, but from the US we've got those initial jobless and continuing claims. Expecting initial jobless to tick up slightly and continuing claims to fall. And then we've got the market PMI preliminary reading for the US, and then further housing data in terms of the US house price index, expecting that to come in at 0.6 from a last reading of 0.5% month on month. And then we've also got US leading indicators in the afternoon, expecting that at 0.5 from flat. Okay, and finally into Friday, probably the biggest day for European data. It's the German GDP Q2 reading. Again, just a confirmation of the number that we saw before. We're looking for that 0.7% again, so no sort of revaluation of their Q2 GDP number. We'll also see aggregate demand data in terms of consumption, government spending, imports, exports, and expecting hopefully some better aggregate demand data there from Germany. Then we get the same from the UK. UK. So we get a confirmation that quarter 2 GDP reading, expecting that consensus is to hold the 0.6% that we saw, but we have seen some really good industrial production and manufacturing production data from the UK, so this could push quarter 2 GDP to 0.7%. Some traders are calling for that, but largely consensus is 0.6. But interesting to see if we do get that bit of positivity from the UK Friday. We'll also get the UK's aggregate demand data, imports, exports, government spending as well. We've got as well, as we do every Friday, that ECB LTRO repayment. Again, we saw a smaller number last week. The payments really starting to trickle down. Quite significantly from what we were seeing previously, and a lot of talk around the liquidity situation in the Eurozone, and interesting to watch that they're paying less and less back, so those banks holding on to the liquidity in Europe, maybe signs of concerns around the liquidity situation or what they think might be coming and holding on to that sort of safety or as buffers. Also from Europe in the afternoon, we've got a consumer confidence survey, expecting that to improve slightly, but still expecting a number of minus 16.5. Otherwise, just from the US, we've got new home sales and expecting those in slightly down. Also worth noting that over Thursday and Friday, it's the Jackson Hole Economic Summit in the US, usually quite a closely watched and anticipated sort of event, and people watching it with all the central bankers from around the world. But however, this year we've seen that Bernanke cannot attend the summit, as well as Carney and also Draghi. So 3 of the key central bankers, presidents of central bankers, will not be attending the summit. So it's not really expected to be quite the event that it normally is, and no speech from Bernanke, which he would normally give sort of an assessment and maybe a bit of guidance on what the Fed was thinking. So we won't see that this year, but something to bear in mind that it's happening this week. Okay, so I think the focus really is going to be those Fed minutes released on Wednesday evening. People will be watching out for those, holding off until we see those, and watching out for that reaction Wednesday evening into Thursday and the rest of the week. Okay, that's it for this week. Thanks very much.